Good day traders, welcome to the channel and welcome to this trade breakdown. This is pound dollar and this was a short taken on Wednesday, the 16th of June 2021. Just putting it out there for future reference. 10 years from today I'll look back and see, this was a trade I took 10 years ago, if we get there. So I'm going to start off by looking at the 4 hour. So we all know the 4 hour has been in this insane, long, irritating consolidation period. Sideways moving market for the past 30 days, plus 30 days. The price has just been jumping up and down between these areas, and it can be quite frustrating, but it can also be very profitable. So I want to show you the first thing, and that is how price reacts around specific key areas on GU. So GU has specific characteristics and I'm gonna look at a few of those. So on GU, I like to see price take out or sweep or grab liquidity above old highs and then see a drop. So you can see that happen over there. Again, in this case, let's zoom in a bit. In this area again, price grabbed the liquidity above this old high over there, and then we had it dump towards the downside. Then price started creating a series of lower lows. You might think, but we're consolidating, we're moving sideways. But I was particularly focused on the wicks, looking at this wick, the wicks, how all the wicks were lower than the ones before them. So they were constantly moving lower, lower, lower. So for me, those were lower highs. And price was making lower lows wicks as well on the daily. So just looking at the wicks, price was moving towards the downside. Then we can also see that price rejected this area over here, previous high, and then saw a massive push towards the downside. So when I'm trading a range like this, there's a lot of opportunities, but just focused on the most recent price action. So with that all being said, price grabs liquidity above an old high, then dumps towards the downside. Consolidates, dumps towards the downside. Pull back, rejecting it, pushes towards the downside. All through, price is moving lower. It might not seem massive, but the devil is in the details. So we can see price is moving lower. And over here, you can clearly see price is moving, not clearly, but you can anticipate price moving lower. So then looking at most recent price action. Price was ranging, we had all of the support areas over here. Then let's drop to the 1 hour. Most recently, price broke structure towards the downside. So we had this structure break towards the downside, indicating that price is moving lower. Then as soon as we have a structure break, I'm always looking at where the move originated and then looking to short from there. So anywhere in this area, looking for price to come back into this area and then sell towards downside. So just following that price is making lower lows, lower highs, and the price is sweeping liquidity and then dumping. Here we have another example. Price swept the liquidity above that high over here, and then we saw the dump towards the downside. Same with all the examples that I showed here. Price sweeps the liquidity, pushes towards the downside. Over here, again, price sweeps the liquidity above this high and then pushes towards the downside. So if we take that into consideration, the price sweeps liquidity then goes towards the downside. That is a very key thing to understand. So again, we had price creating a high, sweeps liquidity, pushes towards the downside. So now, if price then manages to come back up, sweeping the liquidity above this high, then I'm expecting or anticipating price to make another push towards the downside, just as it has done all throughout the range. Go to your own chart, look at it, and you'll see what I'm talking about. So then we need to be patiently waiting and to see what price is going to do. Okay, jumping to the 15-minute time frame. Now we can frame out what's happening. We can see that throughout the late London close and throughout the Asian session, the end of New York session, price was just moving sideways. So we know that this means price is accumulating orders towards the upside and the downside. So this is an accumulation phase. We all know this, and yeah, it's common knowledge among most traders, or most traders in my circle, that we know this is accumulation. And if you do not know this, now we know it. When price moves sideways like this in a tight range, it is accumulating orders. Buys towards the upside, sells towards the downside. So now we have price in this area. Now we need to see where is our openings. So I'm now using my times. So 8 a.m. this is Frankfurt open, and then at 9 we have London open. So this might not seem like much, but it is important to know. First of all, you can potentially look for sales around this area, because this is, in my opinion, how I traded an order block. But there was nothing super clear there. There was a setup there. I did share this on my Instagram, a short-term sell setup that we'll have a look at in just a bit. So let's just put on all the markings. So this is Frankfurt open. We move it up, and then we have London open as well, and we just make it a dash line so we can clearly see. Okay, first of all, price is in this ranging market, consolidating, and then we see the push up towards the upside. Now, remember what I said previously about sweeping the highs and then the push towards the downside? We can clearly see a swing high with liquidity above it, so let's just put in this. So there's liquidity above that high, and we had one over there as well. So we know there's liquidity. We need price to tap into that liquidity and then give us a reaction and push towards the opposite direction. So that is basically the whole story of this trade. Let's just go to the 5 minutes and see how price reacts there. So there was a short opportunity in this trade, but I'm not going to go at this time at London Open. I'm not going to dive too much deep into it, but nothing really happened around in London session. We still did not have a sweep of this high. So we still need to be patient and wait for that sweep. So for New York Open, I'll look around 2 o'clock. This is my New York Open. So let's just say New York Open. So I look to see how price reacts around the opening. Let's have a look, and I'll say stop. Okay, there we had price pushing towards the upside, and now finally we had that liquidity grab that we were looking for above this high, the same that we did here. Now that that happened, now I anticipate and look for price to make that push towards the downside. If you're familiar with trend lines and trend line liquidities, this is a beautiful trend line which signifies liquidity, which signifies people will buy from these areas. They will buy at the taps. You all heard about the third tap, and they buy on the third tap, or the fourth or the sixth, I don't know what, I'm not sure. But needless to say, just noting that there is trend line liquidity. And just going back to the 4 hour, usually 4 hour wicks get filled sometime in the present or the future. So looking for price to come and fill this volume. And on the daily, we have this this low to get tapped, and we have this discount bullish order block that's on the daily. So those are all the targets that we know we need to reach on a higher time frame perspective. So we have that higher time frame picture in mind. So now on the 5 minute, now we need to look, I need to identify an entry. But first we can build this picture a bit better. We can see that we had a series of liquidity being built up here as well, meaning that price is creating a trend line, and above the trend line is liquidity. We had this beautiful sweep up, grabbing all the liquidity above this high, above this trend line, and above this high, and it relates to the New York Open, which is good for us because we like to trade around the session openings, because that's when we have the most volume and the most orders and the best opportunities to catch a trade. So let's just have a look at the lower time frame. Okay, on the 5-minute still, we can see prices pushed on a bit. Now we can identify and see that we have multiple structure breaks. Sorry about that. We have multiple structure breaks. So we have a structure break over there. Let's call that a structure break. And we have some smaller ones in there as well. Let's go to the 2 minutes just to see it clearly. Structure breaks all the way through. So once, this is very important, and this is a very good lesson, and something that you can always apply to your trading. Once we've reached a higher time frame area of interest, or a higher time frame high, or a place where they could liquidity sweep, I then need to see price shifting towards the downside in the form of structure breaks, price breaking towards the downside. Then I look at let's go to the 1 minute, I think it was. On the 1 minute, I then looked at this last up candle before the move towards the downside. And just part of my strategy and how we trade at the Trading Fanatic community is I then look for 50% of that area to get tapped. And then obviously the stop loss above it. This has been tested. This is how we trade, and more often than not, we get the win, we get the sell off, and sometimes you get the stop loss, but the risk to reward ratio is good enough to cover for any losses that might have occurred in that time. So this is now an area where we look for the sell. Another thing that we have, again, trend line liquidity over here. Another fine point of detail that we need to see for price to come back up into this area. You can see how price failed to break above that high, created a lower high. Another beautiful sign that price is going to move towards the downside. Even over here, you can see price move towards the downside and did not tap into our area again, above that high again. So this high then is protected, and we will not likely see price sweeping that high again, because we already swept the highs at the top, and then price was just moving down. We came back up, we swept whatever was on the left, and then price failed to sweep again, push down. So we had confirmation that price was then going to move towards the downside. So I think the pip stop loss was about 3.2, something like that. Oops, I think I covered this area to the left as well, just to be safe. And then the target on the higher time frame, we just dropped to the 15 minute. First target would have been, that was this lows. Can delete that now. And then main target was the swing points on the 1 hour time frame. You can see to the left that point that I marked out over there. So you can see how we've built the picture, and mostly using the concept of liquidity grabs, liquidity sweeps above all highs, and then a move towards the downside. So just applying that concept, looking for the same pattern to happen again. So just looking at the same pattern. And then we obviously had price stalling a bit, we had price moving a bit slowly, and then FOMC dropped price all the way towards the downside, and we had this very nice drop and target smashed. First target, well, that was the main target, I think, yes. So that was the trade, guys. I think the stop loss might have been a bit less, because I remember it was 39 pips, 39R. Anyway, that is then how I took this trade on GU. Let me know in the comments if this makes sense. If you're eager to know more about how we trade, feel free to message me, join the community. And yes, I hope you all the best, and I hope this made sense. Please leave a comment, like, subscribe, put on the notification bell, and let me know if you'd be interested to see more of these videos. And if you're interested in learning more how we trade, send me a DM, send me a message, and we can talk about it. Have a great day. Goodbye.